This is Bazaar Morning Call, broadcasting live from the CNBC-TV18 Motilal Oswal studios in Mumbai.
Good morning. You're with us here on a fresh new edition of Bazaar Morning Call. We are starting a fresh new week, and we are starting on a pretty good note after Friday's bounce. I'm Prashant. With me, my colleague Sonia and Nigel. Guys, hi, morning.
Hi, good morning. Well, a long week ahead. You have the RBI policy as well. So many headlines today. So I guess we have plenty to talk about and some big guests lined up as well.
Yeah, absolutely. And when you said that long, I thought you were going to say long weekend ahead.
Oh, there's
which
a
is
long
the next one.
Yeah, but there's a long time for that.
Well, absolutely. Well, let's just quickly tell you what you need to know as we begin another session, another week. Markets were on the front foot on Friday. There was a bounce which came through. And that after the previous 2 days, which is Wednesday and Thursday, where the Nifty had sold off almost 350 odd points or so. So Friday's bounce was good. That's point number one. Now, where do we go from here? I'll get to that in just a bit. But this is where the U.S. market action comes in. U.S. jobs data was inconclusive. Why do I say that? I mean, it didn't tell us very clearly which way things are going to go as far as Fed policy is concerned. The data itself was a little disaggregated, pointing in different directions. So the headline jobs number, right? How many jobs did the U.S. economy add? That missed by a small number, not a large number, very, very slight miss as compared to consensus. But the unemployment rate fell, and more importantly, the wages data within the jobs number was strong as well. Actually, it beat expectations. So you get a sense, markets got a sense that, well, overall, maybe there is a bit of a slowdown, but, well, unemployment rate and wages are still looking pretty good. So how to read it? And that's the reason I'm saying that the data, largely, by the end of it, was inconclusive. We were seeing this huge rally in U.S. bond yields, right? The 10-year, for example, at the high had reached 4.2, little over 4.2. In a single session, we fell. The 10-year yield fell 14 basis points to 4.03. So it's a pretty large, significant move for the one of the most traded instruments in the world, the 10-year. Consequently, you also saw the dollar index take a bit of a breather. We are around the 100, the psychologically important 102. I think we're slightly above it, but we fell 0.5%. That also had been rallying higher. And the S&P was down about 0.5% or so. So I think the debate still is out there that whether we'll get a soft landing, whether labor market is going to cool, whether, the Fed will reach its target at 2% inflation without a significant slowdown, etc., etc., etc. So far, the data that we've got is pointing in all kinds of directions. We don't know. Some say that the data is still too strong. The CPI number this Thursday, which we will get, will be the key input for the Fed decision in September. So I think it assumes added importance because of the kind of cues that we got from the jobs number. Let's come to the market here in India. We will need to see a follow-through after Friday's bounce, after the two-day sell-off prior to that. And how do we decipher whether what we saw on Friday is just a corrective bounce, which itself will get corrected, get sold into, etc.? You need to go with markers. So the first marker is the 20-day moving average, which is for the Nifty stands at 19,626. The Nifty needs to get its head above that level. It's exactly almost 100 points from where we left off on Friday. So above that, a close above that, I think, people will start to trust this a little bit more to be able to go long. Support comes in at Thursday's low, which is 19,300. That's 200 points out from where we left off. Bank Nifty resistance comes in at the 20-day moving average again. For the Bank Nifty, that stands at 45,356. The swing high beyond the 20 days stands at 45,783. The support for the Nifty Bank comes in about 1% lower, 1.5% lower at 44,280. So these are markers. The first for both the Nifty and the Bank Nifty, very simply, is the 20-day moving average. Even when that Fitch downgrade came, which was Wednesday, I think, for us, and I think in the Wednesday evening, we put that data out saying that in strong markets, bad news gets discounted. So fingers crossed, at least I would lean on the side to say that at least that Fitch-related damage perhaps is behind, and we trade more organically based on the cues that we get from US and global markets, etc. Sonia.
Oh, absolutely. And, there is definitely some caution on board. I take your point that there was a big bounce that we saw on Friday. But this morning, as we wake up, a lot of negative cues are stacked up for us. So the US markets, of course, were down for the fourth straight day, and you saw deep cuts on Friday as well. The Nasdaq, in fact, was down almost 3% last week, and it's the worst week that the Nasdaq can see since the month of March. Not just that, crude oil has seen a sixth straight week of gains, doesn't bode too well for markets like our own. Although the Nifty has been holding on to that 19,500 mark quite well. If you look at the FI data as well, FIs have been selling in the cash market for 7 straight days now. Once again, FIs sold over 550 crores. So the cues are stacked up on the negative side. Even in terms of earnings, right, almost all the earnings that came out post-market hours on Friday were below street expectations, whether it was Britannia, Bank of Baroda, Balkrishna Industries, BHEL's, the losses went up year on year. So the earnings scorecard was not that great. In that context, a couple of things to watch out for. There's the RBI policy on the 10th of August, expected to be a status quo this time around, so no real move in terms of rates. And lots of earnings this week. So there's India Cements, Torrent Pharma, MedPlus reporting their numbers today. And tomorrow there's Coal India. On Wednesday there's Bata. So plenty of stocks to focus on. But, the odds are stacked largely in favor of the bears, purely if you go by the cues. But then again, we had that bounce back on Friday. So it's going to be an interesting day.
Well, that's right, Sonia. The long-awaited bounce back after a couple of dull sessions. We were hoping to end the week on a positive note. And that's precisely what happened. So the FIs, well, they had short positions which got covered out. So they covered close to 5,000 of those short positions, and they added 10,000 long positions. Now, we made this point last week itself that having some shorts in the system could be one of the reasons that we get a bit of a bounce. And that's the way it played out, because the FIs, they're not showing us the big money. The big inflows have dried up, but when the FIs are net short, that gives you a bit of a reason to see a bit of a bounce. And last week, we started the week with the net long positions on the FI side at close to around 5,000 contracts. Now, that got covered out and we moved into a net short positioning of close to around 40,000 contracts. Now, since we have 40,000 contracts net short, well, some of those contracts covered out. And that's why you saw a swing of close to around 15,000 contracts. So the FIs, they continue to remain net short, but now it's come down to around 25,000 contracts odd on the short side. In terms of the options data, we had two strikes that were very active. 19,500 put, that added close to around 36 lakh shares odd. Premium close to around 80 rupees. While the 19,600 call as well added roughly around 30 lakh shares, and the premium out there was around 50 rupees, which brings us to the levels. Yes, we had a good relief rally, but you'll feel more confident once we get past the 20 DMA. Since the 19,500 put though was written, you'll see the near-term support comes in at around the 19,400 odd mark, and the all-important mark will be last week's low. That's what we saw on August 3rd itself. The Nifty Bank, well, it was flirting around with that 50 DMA. In fact, it broke that mark intraday in the last week itself. So you have your two reference points on the downside. The 50 DMA, that's 44,660, and the August 3rd low as well, that comes up for you on the screen. So let's see how this goes, but you'll feel more confident about this move stretching on the upside once we get past the 20 DMA on the Nifty itself.
Okay, well, we have plenty to talk about, right? And some big guests joining us in a bit, so do stay tuned in. Let's start off with Lawrence Balanco of CLSA, who says that taking a hard look at the long horizon charts leads us to believe that secular changes in commodity, US yields and US dollar patterns indicate a sustained move towards emerging markets. He flags the long-term breakout potential in Brazil, China and Indonesia. In addition, he sees US-listed artificial intelligence, robotics, Internet of Things and clean energy ETFs as ways to play the latest wave of innovation. Lawrence adds, as AI is overextended, clean energy currently presents the most attractive entry point.
Okay, let's get you some money market views as well. B. Prasanna of ICICI Bank says that the US yields climbed and the dollar retreated after a lower than expected non-farm payrolls print signaled a softening of the job market. He says rupee, which tested the upper bound of the 82 to 83 to a dollar range last week on the back of strong dollar sentiment, is set to recover. However, he adds it will remain under pressure from rising crude prices and a lack of incremental inflows in the near future. He says the RBI MPC is expected to deliver a hawkish pause and will further give further cues to the domestic currency, which is expected to trade between 82.2 to 82.9 to a dollar.
And on the bonds, B. Prasanna says globally yields moved sharply lower owing to weaker than expected labour data. Back home, he says local yields are likely to remain volatile going into the MPC meeting, which is expected to deliver a hawkish pause, citing higher headline inflation prints. He expects the 10-year benchmark bond yield to trade in a range of 7.1 to 7.25%.
Well, we have a lot of stock-specific action to track for you. Get to that in just a bit for now. But for the time being, let's run into the list that we're looking at in our top 10 segment. And we're expecting just two stocks to react to positive news flow. That's CE Info Systems and Balrampur Chini. While on the flip side, you have Britannia, Cipla, Fortis Health, as well as a few more stocks: Bank of Baroda, Delivery, Balkrishna Industries, APL Apollo Tubes, and BHAL, all expected to react to negative news flow. So you have the ratio of 8 declines to around 2 advances.
Okay, well, we have our first guest and a big name at that. Jonathan Garner is Chief Asia and Emerging Market Equity Strategist at Morgan Stanley. Jonathan, great to have you with us here. Thank you very much for your time. You guys turned bullish on emerging markets late October 2022, and it's played out very well. I think the emerging market index is up some 25% since that point on. And now you are changing your assessment of EM markets and kind of rotating India right to the number one market for you. So I just want to start by asking you, what's leading you to do it? Is it, just India on its own, or is it a more relative kind of call with regards to what you're seeing or not seeing in other markets? Go on.
Well, typically when we get a bull market in Asia and emerging markets, it begins in North Asia, in Korea, Taiwan. And that's exactly what we saw this time in semiconductors and technology hardware. India's actually underperformed the rest of Asia and EM in aggregate over the last 9 months. It's been a volatile period of performance relative. But when we reran our process, it was strongly indicating taking profits, in particular on Taiwan, moving to the sidelines on China, going underweight Australia. Whereas for India, some of these secular drivers of the market are really falling into place. So it has moved up now, as you said, to number one in our ranking. And we think it's a time for foreign investors to re-engage with the market.
Oh, that's great to hear. India has moved up to number one in your ranking. Jonathan, good morning and thanks for being with us on the channel. In your report, you also speak about how India has a young demographic profile, and that is what's supporting equity market inflows. Which are the sectors or spaces where you see disproportionate amount of flows come through in India because of this demographic?
Yes, I wouldn't want to do a sort of one-factor analysis and say it's only about demography. There are other very attractive features like inward foreign direct investment and private equity investment that funds CapEx is very strong as well. And India is very advantaged in this multipolar world framework that we use to think about the complex geopolitics that exist today. But on the demographic side, yes, if you look at GDP per capita of about $2,500, that compares to 13,000 in China. And you can certainly play that demographic theme through consumer and through financials in particular. And there are other sort of domestic demand plays, and that's where we're much more focused than on, say, the export plays. Another key feature of India that we have been talking about in this note is the tendency of the rupee to be far more stable than in the past and to actually appreciate in real effective exchange rate terms versus the currency basket, which is in sharp contrast to the Chinese renminbi that is now structurally starting to depreciate. And so for a global investor, you don't have to worry so much about the currency as in the past.
Hi, Jonathan. Good morning. Going through your note, and as you mentioned, from October onwards, actually, India has given just single-digit returns, while we have some of your peers say China, Taiwan, they're up more than 30%. But still, valuation-wise, well, we're trading at a sharp premium in comparison to the Chinese markets. Do you think this is justified? Do you think Indian markets can further re-rate from here on, going by the factors that you've mentioned in your report?
Yes, so obviously one's view on the forward PE depends on your earnings estimates, and our colleagues in India, led by Ridham Desai, are more bullish than consensus as we go out over the next couple of years. And India has this track record of compounding earnings now in dollars far faster than EM overall, and certainly than China. So the market is not as expensive, particularly on a relative basis, as it was last October, when relative to Taiwan and Korea, it's probably the most expensive we've ever seen. It's clearly not at any kind of low valuation, but there are so many positives in the market right now that we suspect investors will be happy with the multiple.
Jonathan, as you said, for long periods of time, India has done much better on a compounded basis. So it kind of looks through all the events, etc. And elections are one of them. So they come and go. But we've got one coming up, and I think markets will pay attention to it. I mean, how are you thinking about it? You think that, I mean, going into it perhaps acts as a bit of a speed breaker, or would not be an issue at all? What's the sense?
We don't have comments on political processes in any of the countries that we follow. We do observe, of course, is policy and the policy framework. And what matters in India's case for the call that we're making is things like the fiscal deficit, the way that interest rates are managed, whether or not foreign portfolio and FDI investment continues to be very strong. That's what we'll be monitoring. And at the moment, it's probably the best I've ever seen in over 2 decades covering India.
In your India report, you also speak about one of the big risks being a resurgence in commodity prices. And we're seeing that happen as we speak, right? I mean, crude oil prices have been rising for 6 straight weeks. Do you think that could be an impediment to the market up move?
Yeah, certainly that's been a traditional impediment for India. It's not unique in that regard. Most of Asia is oil importing. But our view is that actually end-use product demand in oil is not that strong right now. So we doubt that the recent strength is sustained. And given the external position that India finds itself in, much smaller current account deficit relative to GDP than in the past, and much more structural capital inflows from foreign direct investment and private equity, I think it's extremely unlikely that we get any significant volatility in the rupee arising from this.
All right, Jonathan, final question before we let you go. With regard to the India portfolio, how have you turned things around? I mean, any kind of stock-specific moves? I think Titan, there was Larsen & Toubro, I think there was a bit of a rejig out there. Could you run us through that?
Yes, we're not permissioned to talk about stocks on this interview, unfortunately, but broadly, yes, on the consumer side and on the industrials and financials, that's where we would concentrate the portfolio at the moment.
All right, Jonathan, we'll leave it at that. Thanks a lot for joining us. Appreciate your time here on CNBC TV18. That's Morgan Stanley talking about why they upgraded India. And of course, compared to emerging markets, compared to markets like China, there are many things that are working in India's favor. One of them being the stability in the Indian rupee versus the Chinese renminbi depreciating quite a bit. So lots of interesting snippets over there in that conversation. You can hear it through the course of the day. Let's dip into a quick break. On the other side, our list of top 10 stocks coming up.
This is Bazaar Morning Call, broadcasting live from the CNBC-TV18 Motilal Oswal studios in Mumbai.
Welcome back, folks. Hope you're having a good morning so far. Let's begin the day with plenty of cues that you need to watch out for. First up, Mangalam joins us to tell us that Britannia was not so crunchy this time around. Mangalam, over to you.
Well, if you leave a biscuit for too long in the monsoon season, it does lose its crunch. And along with the season, the results actually are slightly weak. The results miss expectations, and the weakness comes in from the top line itself. The volume growth of the company this time around has been absolutely flat. The street was working with a number of mid-single digits, as a result of which the revenue growth has been largely led by price, 8.5% versus street expectations of 11% growth. And the EBITDA optically looks like a 38% jump. But remember, this comes on a low base, and the street was actually expecting a 50% jump out there. And the net profit comes in at 455 crores versus our poll of 515 odd crores itself. The company says that there was competitive intensity which has come back as the commodity prices have come down, as a result of which they had to take some price corrections, and the growth has been led by their distribution gains and investments in brands. The stock has corrected about 10% from its 52-week high, still trades at 49 times, so see some red on Britannia.
Okay, all right. Thanks very much, Mangalam, for that. Let's talk about Cipla. Ekta is here with that one. Ekta, good morning.
Morning. Well, the big news with regards to Cipla is in now. They have received that official action indicated status for their Pithampur facility, which is basically the Indore plant. The plant was inspected from 6th to 17th Feb. They were issued 8 observations. And the street was expecting it to probably escalate to an OAI, and that's the news which has come through. So it has taken place. The company has said there's no material risk to existing portfolio, and companies executing a plan to de-risk the new products file, which is what they had indicated to us when we had spoken to them post their numbers as well. Now the company has indicated they are transferring one of their key products, Advair generic. It's an inhaler which is filed from the Indore facility, but it is probably going to get delayed to the earliest, which is FY25 end in terms of a launch. So that's the key negative, but the street is probably factored in, and the news with regards to a possible promoter stake sale is probably going to offset all of this negative news.
Okay, thanks for that. What about Fortis, Ekta? What's the news on that one?
Well, earnings, and it was a mixed set of numbers, nothing particularly negative. Revenue was up 11% The margins did come off 16.4 versus 16.9% year on year, but that's because of the hospital margins which came off 15.2 versus 16.4%. Occupancies were a bit sluggish, 64% versus 65% year on year. But what did well was the diagnostic margins, which improved. The profit also 111 odd crores is what they reported this time. It was a come off on a year on year basis. But in terms of the other positive, it was medical tourism, which did well. It was up 29%. The company is also going to be beginning their IPO process for their diagnostic arm. So that is another piece of news which will probably keep the stock active. But just based on the hospital margins coming off, I expect the stock to probably see a mild red.
Okay, all right, Ekta, thanks for that. Well, Abhishek joins us to tell us about Bank of Baroda. Abhishek, a bit of a disappointment out there?
Actually, the cost of funds have weighed in on the performance. So the net interest margin on a sequential basis, the decline of about 22 basis points is the highest quarter-on-quarter decline that you are seeing in last 26 quarters. Cost to income ratio on the flip side is one of the best in last 22 quarters, thanks to the fact that OPEX has declined by more than 6% quarter-on-quarter, and treasury income has been pretty robust. Annualized slippage ratio is also one of the lowest in last 11 quarters. Operating profit X of treasury, that is taking around the core operating profit, that's declined by 14.2% quarter-on-quarter. CASA ratio is at 11-quarter low. This is the phenomenon seen across industry. But one of the key points to highlight is that the NCLT exposure have increased by more than 6% quarter-on-quarter, about 6.6%, and the provision coverage ratio has declined massively over there. In terms of our poll, both the PNL, both the NI and PAT is below our poll. Back to you.
All right, thanks a lot for that. Let's go across to Mangalam now. He's tracking delivery this time. Mangalam, how did it look?
Well, it looks softer than what the street was anticipating. In fact, the stock had seen a big rally on Friday on account of Zomato's numbers. So everyone thought maybe the page will turn for all new age companies. That's not the case for delivery. In fact, the revenue growth has been soft, just around 3.8 odd % quarter-on-quarter. Higher other expenses impacted the EBITDA. In fact, quarter-on-quarter, the EBITDA has turned into a loss from 13.5 crore gain. It's a negative 13 odd crores. And the net loss, however, on the bottom line has narrowed. That's largely on account of lower depreciation and higher other income. So operationally, it's been a soft quarter for them. Revenue growth, like I said, just shy of 4%. Depreciation has come in at 167 crore versus 242 crores. So that's aided the decline that we're seeing in the net loss itself. I see some red on that stock, mainly because it saw a big rally on Friday.
All right, thanks a lot for that. Balkrishna Industries, I'm going with red on that name as well. The revenues were hit quite hard this time. It was a drop of 17% that Balkrishna saw in its revenues. That's because there was some production disruption on account of the cyclone Biparjoy. The company says that their guidance is also quite cautious. They speak about how in the second half there are quite a bit of challenges for them. There are recessionary fears in the export markets, and that could perhaps hit their earnings. Just take a look at their earnings. Top line has seen a sharp fall of almost 17%. On the margins, it's still held up. EBITDA up by about 13%, PAT up by 8.5%. But core volumes have fallen 19% year on year. That's because their operations at the Bhuj plant were suspended from 13 June to 19 June, and that led to a sharp loss of 5 days of production. They also spoke about a lot of challenges in the global markets. But going with red there, you're looking at APL Apollo?
I'm going with red there as well, Sonia, because valuation-wise, the stock is not cheap, and there was a bit of a miss in terms of their numbers. On the top line, yes, there was a growth of close to around 32%. However, that was, because of volumes. Volumes are much higher. The problem is on realizations. Though on the realizations front, on a sequential basis, some part of the street expected a contraction. That didn't happen because the share of value-added products, in fact, went up from around 54% to around 55% odd. Sales volumes, well, they have capacities coming on stream, the Raipur unit as well, so that's why that looked quite good. However, on the EBITDA front, well, that was a bit of a miss. I was looking at a couple of brokerages like Ambit as well as Equirus. It's missed their estimates by around 5 to around 7% odd. And on an EBITDA per ton basis, well, it did see some bit of a contraction on a sequential basis, down by close to around 250 rupees. Profit number, though, was up by close to 60%. However, owing to the small miss on the EBITDA front, as well as high valuations, going with a tinge of red on this stock. But let's hop across to Vivek. He's joining us to tell us about BHEL. Vivek?
Well, good morning. Anyway you look at it, it's been a weak operational quarter as far as BHEL is concerned. Revenue from operations up just around 7% over the 5,000 crore mark. However, revenues as well as operations were marred by the fact that the company continues to, witness weak execution trends, and this is something that weighed in operationally as well. So, reported EBITDA loss of over 240 crore, as well as, on the bottom line to a significant loss that the company actually delivered over 350 crores. The only solace as far as the, BHEL earnings were concerned was the fact that, this time around order bookings were quite strong. However, it's been aided by the strong Vande Bharat booking. So order booking coming in over 15,600 crore. Order book, the core order book is quite strong, over 1 lakh crore. Now talking about, the order book breakup, thermal power continues to be over 68% and continues to contribute quite significantly as far as, BHEL's order booking is concerned. Lastly, what CLSA has to say is that, it's another weak quarter where actually you're seeing expanding EBITDA as well as PAT trends on weak execution, and one of the worries has been non-moving orders that the company is currently facing.
All right, Vivek, thanks very much for that. Mapma India is the other one which came out with numbers. The CE Infosystems. Reema's got details. Reema, morning.
Hi, good morning. So it's a good quarter. Revenue growth of 23% quarter on quarter, 37% on a year-on-year basis. Margins have expanded on a quarter-on-quarter basis. From 40%, it's come to 41.9%. The third reason is there have been pretty good deal wins. In the current quarter, the company won the EV deal with Hero MotoCorp's new Harley-Davidson X440 vehicle. So they won that deal win. And fourth, the company has laid out a 5-year vision where they want to achieve a top line of 1,000 crore rupees, and this requires a CAGR of 35 to 40% over the next 5 years. Back to you.
Okay, thanks a lot for that, Reema. So let's go across to Surbhi now. She's tracking Balrampur Chini. Surbhi, how did it look?
It was a very strong set from Balrampur Chini. The revenues were up by 29% on a year-on-year basis, and this is led by both volumes and higher realizations in both sugar and distillery segment. The gross profit margins came in at 26% versus 18%, and that has led to the EBITDA growth of nearly 4 times, came in at 163 crores. The margins have come in at 12%. In the sugar segment, it's seen a revenue growth of 22%, and the sugar EBIT is now at 71 crores versus a loss of nearly 56 crores same time last year. In the distillery segment, the revenues have grown nearly 55%, but the margins have come down sharply, and that is because of higher transfer pricing of sugar. But overall, a really good set of numbers from Balrampur Chini.
Okay, thanks a lot for that. So those are that's the list of top 10 stocks, and here's a quick recap. Stocks with positive news flow: CE Info Systems and Balrampur Chini. Well, guess what? Plenty of other stocks that we spoke about are all could be in the red because of weak earnings. Britannia, Fortis Healthcare, Cipla, Bank of Baroda, Delivery, Balkrishna, APL Apollo Tubes and BHEL. Let's take a quick break. On the other side of the break, Prakash Diwan will be joining in for a fundamental stock analysis. We'll also connect with Anuj Khanna Soham of Affle India to talk about the quarter gone by. Stay tuned.
Welcome back. You're tuned into Bazaar Morning Call. Hope you're having a good Monday morning. Well, as promised, let's get straight to our first corporate on the show. Affle India, they reported pretty good revenue growth, while the profit surge aided by a lower tax rate. However, margins, they contracted a little more than what the street was working with. Mr. Anuj Khanna Soham, the founder, chairman, as well as the CEO at Affle India, joins us on the show. Hi, Anuj. Morning. Thanks so much for joining in. Well, a couple of questions on the top line itself. The international business for the last 3 quarters or so, I think it was in that vicinity of around 225 crores to around 250 crores. Now we are bounced up to around 275 crores. Is this bounce in revenues sustainable? And also organic growth for the first quarter is around 17%. Earlier, you were guiding for around 20-25%. Sticking to that?
Well, first of all, thank you for having me on your show. Today is actually a very special day. We complete almost the 4 years of our IPO anniversary. And I would like to thank all the stakeholders for, over 364,000 shareholders for their consistent trust and support to our company. Our results for this quarter have been actually quite resilient and robust. If we see it from the lens of India, as well as the global emerging markets and verticals, we have grown over 20% organically year-on-year basis in this quarter. And in the international markets also, I believe that the growth trend is very strong because we have strengthened and solidified our foundation in developed markets, especially in the US, where we have now the highest number of our customers, highest number of employees. And together with UAP's acquisition recently, I think we are stronger than ever before. So the confidence of our team to go out there convincingly win against competition is very high. So we are in a much stronger position today than ever before. If you look at it overall, this is our highest quarterly revenue, highest quarterly conversions delivered in the CPCU business at the highest CPCU rate. So it's a very strong result.
Got it. I think my colleague was asking you about the way forward. So if you can tell us what is the growth guidance that you have. Earlier, I think you spoke about a revenue guidance of 20 to 25%. Are you on track to do that? And can you tell us what are the trends, particularly in the India business?
See, in terms of the overall growth, from a profit after tax perspective, from a bottom line growth perspective, we are already 21+% in this quarter versus the last year. And I think it is reasonable to expect that over 20% profit growth in the whole financial year versus the last year is going to be sustainable, should be expected. And the fact that the top line wise, the international markets, US and developed markets, we have solidified our foundations. What I'm indicating towards is that we can build on that strong foundation and build sustainably profitable cash flow positive growth for our company going forward. As far as India is concerned, I think you would have also heard that recently the cabinet has approved budgets for inclusive internet penetration across 640,000 villages in India. I think that will help the consumer adoption of connected devices, and that will absolutely be a strong tailwind for next many years to come for our India business as well.
Anuj, are you seeing an advertising pullback in US and Europe?
I think in US, we can see the results of some of the big ad tech companies as well. There is already some positive signs. So what we can see is that the macro factors that were pulling us down for last several quarters, I think they are easing out. And also the fact that our own action plans have solidified our foundations there, we are in a much better position to have a more optimistic outlook going forward.
Okay, by the way, that's some big news that's coming on your screen. And of course, it will definitely perhaps, stock will be in focus. Vijay Shekhar Sharma of Paytm will acquire 10.3% stake in Paytm from Antfin Netherlands Holding BV. So that's a big news that has come in. If you pull up a chart, of Paytm in the last 1 month, the stock has not done much. It's down almost about 10-odd%. But
yeah, I mean,
it's big news. It's massive news.
Yeah. I mean,
its stake will rise to almost 20%, I think, now after acquiring this.
This is going to be a very, very big deal because 10% at current prices will be nearly 5,000 crore rupees. The market capitalization of the company is closer to around 50,000 crore rupees, and this was the overhang that the PE will come over there and sell. Now, Vijay Shekhar Sharma is saying, I'm going to put in the money, I'm going to buy that 10% stake on. So this is massive news. Last recorded number that I have, he held closer on 9% stake, so in all probability that will go closer to around 20%. Coming in there, showing some faith, the street will read this positively. We'll have to find out further details on this. But the first look at this is big, big news out there. And, Vijay Shekhar Sharma going in there and saying, I'm going to go ahead and pick up this 10%, 5,000 crores at current prices. We'll have to see how the deal shapes up.
And, there is this expression of confidence in the press release as well. I mean, he speaks about how he's quite proud of Paytm's role as a true champion of Made in India financial innovation, achievements in revolutionizing mobile payments and contribution to the formal financial services inclusion in the country, etc. So he also speaks about how after this transaction, there will be no change in the management or the control of Paytm, since Mr. Sharma will continue as the managing director and the CEO, and the existing board would continue as is. Paytm continues to remain a professionally managed company with no identifiable promoter. There's no nominee of Antfin on the board of Paytm either, but big news coming through. I mean, it's already had a fair share of rally, right? This year, the stock is up 50%.
This is what you call value investing, right? They did the IPO
at
a valuation of $20 billion, right? And now they're coming back and buying the stake at $6 billion. So this is
at a third.
At a third. So that is, smart capital allocation. But this is positive.
And also a vote of confidence, right, in the business.
No, absolutely. Yeah. That is the case, and I'm sure the market will read it likewise. And I hope we'll have the opportunity to speak with Mr. Vijay Shekhar Sharma as well, because this is important news flow which is coming on. We'll try and reach out to him. Mr. Khanna, thank you very much for joining us. Good speaking with you, and appreciate your time here on CNBC.
All right.
TV18.
Also, just a couple of more details, right? Based on the closing price on August 4, the value of this 10.3% stake amounts to $628 million. So that's the value of the stake that Vijay Shekhar Sharma is buying. In fact, Prakash Diwan is with us, so let's get him on board. Prakash, this is a huge show of confidence from the promoter coming in and straight. I mean, it's not a small amount, right? Almost $650 million pumped in by the promoter. What do you do if you're a shareholder at this 800 rupee price? What's your view?
Good morning, Sonia. So I think the answer lies in your question. If the promoter is putting in money and endorsing the future at this price, I don't see any reason why a shareholder would need to kind of doubt it. And it's also important that you look at it in the context of the fact that Ant Financial probably were looking at an exit. It would have been significantly it would have impaired the stock had it been kind of put out and then there were no takers. But the promoter himself buying is definitely very positive. Apart from that, the business prospects of the company itself have, kind of metamorphosed into a much larger multiple revenue stream aggregating into profitability. So the road to profitability is something which probably is more evident than ever before. And this if you trace back to the Davos interview that Shireen had with Mr. Sharma, I think the vote of confidence stemmed from there. I mean, it started from there. You could, see the kind of changes that have happened in the business and the way the management is, approached that. So I think it's definitely going to be very positive for people to see it come back in the record.
Okay. All right. No, absolutely. Prakash, good morning. Great to have you with us here as always. There was a bit of, I don't think it's a flip-flop, but the tablet ban news, right, which came through, and Dixon was up 15% on the back of it on Thursday and Friday. I think the government's given some more breathing time, right? I think it was going into effect immediately. Now I think it goes into effect starting October. For companies like Dixon, etc., from a stock perspective, what does it mean? Any additional thoughts?
Good morning, Prashant. So in the first place, this is something which has been on the cards for quite some time. I mean, the government had introduced a PLI scheme for laptops, which really didn't see much of a response. They kind of extended the validity, the period of validity, and then this is something like a very clear signal that we are very serious about this particular aspect. And remember, electronics is the third largest import constituent in terms of billings after crude and gold. So this is an area which is of concern, and they would want to do it. From a stock market perspective, there are not many companies that are yet in the ecosystem, but what it does is it sets the ball rolling in terms of a lot of larger players coming into the country and starting to develop that ecosystem. So the likes of Dixon and all would probably be part of the ecosystem, but I don't think it's going to move the needle too much for them, even once the implementation starts. So it's going to be a while, but you'll probably see the development of a huge vendor ecosystem that will see a lot of companies participate. But we'll have to wait and watch for that after the big announcements from who are the larger players who come into India to start manufacturing domestically. So that's going to be the key trigger for the industry rather than these moves right now.
All right. Hi, Prakash. Morning. What do you make of the PSU numbers? I mean, SBI was a little bit disappointing. Now, over the weekend, you have Bank of Baroda as well. That was a little bit disappointing. I mean, you had compression on the NIMs. How do you approach them?
Good morning, Nigel. So, even when the SBI numbers came through, I was of the view that, everything that is soft about the numbers, whether it was, a bit of the NI compression or whether it was, the NPA incremental change, all of that is attributable to certain factors, which are probably one-off or seasonal or whatever you want to call it. And the interview with the management very clearly tells you that it's just going to be a phase that every bank is going to go through. And once that is done, the kind of robust, balance sheet strength that they have, the opportunity that they're sitting on, I don't see any reason why, the stock at lower levels doesn't become attractive. So I'm from the camp that believes that some of these PSU banks offer you great secular long-term opportunities, which you can't kind of, equate or measure with on a Q-on-Q basis. But it's more long-term. But BOB, of course, had some issues related to CASA and, a little bit of softness. I think that also could change. But I'm of the belief that the likes of SBI will do far better than some of the other PSU banks, given its size, given its footprint. There's no reason to get alarmed. And then that drop that we saw on Friday will probably reverse very quickly once things look up in the market, on an aggregate basis also.
All right, let's do one thing. Let's take a quick break. There's so much news flow that's hitting us by the minute. So we'll try and analyze all of that for you on the other side of the break. Anuj Singhal will also join in for a quick trade setup. After that, most of the top stock picks for the day from our technical and F&O experts lined up.
Okay, welcome back. Well, you got, 11 minutes to go for the pre-open session, and the implied open is 41 points higher. Anuj is here with a quick check on how he's looking at the trade setup. Anuj, good morning.
Morning, Prashant. Well, it's a bit of a make-or-break week for the market for a lot of reasons. For starters, it's the last week of the earnings season. I know a lot of backbenchers would come on 14th, but by the end of this week, most of the big numbers would have come out. The RBI monetary policy decision, of course, happens on Thursday, which is the weekly options expiry day as well. The dollar index has been stable, above 102, and Brent crude is back above 86. So I think that could be a bit of a negative for the market. And the US bond market clearly is indicating that the rate hikes are not done yet in the system. And perhaps that explains the recent FI selling that you have seen. It could be largely ETF driven. Also, the Nifty is at make or break level of the 20-day exponential moving average, because Friday's high, 19,538, was exactly that 20-day exponential moving average and the first resistance that we discussed. The other thing is that the earnings of the last few days have been quite poor. SBI's numbers clearly were disappointment. We saw that with Bank of Baroda as well, and Britannia's numbers as well, even though Britannia has already fallen ahead of the numbers. But even in the last leg of earnings season is not providing you with any kind of tailwind for the market. Quickly, let me come to the trading setup then. For whatever it's worth, on Friday, the Nifty made a higher high and a higher low. Even by 1 point, the high was higher than the previous day's high by just about 1 point. And the low was significantly higher, 19,296 versus 19,436. I think that, in a way, gives you a reference point to work with, higher high and higher low on Friday. Now, in terms of resistance, you're likely to open above the first resistance, which is 19,538, Friday's high, and the 20-day exponential moving average. I think the bigger resistance is 19,600, which is a 10-day exponential moving average, and also based on the options. The trend changes if you start to move above that. About 19,600, the texture will once again become buy on dips after the recent sell-on rally move. And I say that because two stocks really made a big contribution on Friday, HDFC Bank and Reliance. These are the two top stocks in terms of weight and Nifty contribution. So if these two stocks start to move, I think the index will move. But let's see. The other thing is the broader market has been remarkably strong all through this while. So as such, there's no problem with the market. Let's see if we can take out 19,600 and trade above that, because that would bring in some positivity.
All right. Thanks a lot, Anuj, for that. Mitesh Thakkar and Sudarshan Sukhania are with us. So let's get them on board. Sudarshan, morning. Let me start with you. The market has held on to the 19,500 mark despite all the challenges, right? This morning, the cues are not that great from the global arena. But given all of this, would you buy the dip, and what is the strategy for today?
Yeah, good morning. You're quite correct. Somewhere around 19,400 to 500, a support zone was available, and that support is holding for the time being. We'll just have to go by that. So the current dip is a buying opportunity for intraday traders. The ideal position would be to see an intraday dip and then buy. If the market is opening 40, 50 or 70 points higher, there's no sense in running after it. You'll find a period of consolidation or a minor decline during the day and go long, keep a 50 to 75 point stop, take very small risks. But the trade is only on the long side of the market. I would not suggest trading the Bank Nifty at all. It's underperforming and it has a much poorer chart than the Nifty. So the buying focus should be on the Nifty.
Okay, all right. Got that, Sudarshan. Mitesh, coming across to you. Tell us, what's your view on the markets? You could also run us through your picks.
Morning, Nigel. See, I think the gap down which happened last week on Wednesday, indicated some kind of a short-term change in the trend. So from buy on declines, I think the market texture has changed to sell on rise till we see the indices fill the gap up, which means that they start getting past the Tuesday's low. So till that happens, I think my view will be slightly negative on both the indices. The levels on the Nifty are about 19,650, 700. That's the preferred zone to sell. So they're slightly higher because we've had a fall on Wednesday and Thursday and then some pullback on Friday. And for the Bank Nifty, it's close to about 45, 600, 700. So these are the levels I would want to go aggressively short. Till then, what can happen is that mild rallies, you would want to slowly accumulate put options. So, in the Nifty, we would suggest buying into 19,600 strike put option with today's gap up. And in the Bank Nifty, 45,000 put options can be bought. And as we get closer to about 45, 600, 650, I would even venture into shorting the futures on the Bank Nifty side. So primarily view is negative on the indices, but with 2 days of fall and some pullback on Friday, I think this pullback could extend for about half a day or maybe a full day today. But I think eventually at higher levels, you will see supply emerge. So have a negative view. On the stock side, for the day, I have 2 buys and 2 sells. On the buying side is Jubilant Foods, had a very strong candlestick action on Friday, good price volume setup. So buy here with a stop below 505 for a target of 540. And also a buy on InfoEdge, which is Naukri.com. That's a buy with a stop below 47.85 for targets of 5100. And
all right. Sorry, go on.
Sorry, Prashant. Tata Consumers is a sell if it breaks the pivot of 830. Then take a stop at 840, look for targets of 810. And Gujarat Gas is a sell with a stop at 460 for targets of 450.
Got it. Absolutely. Sudarshan, what about you? What are your calls?
Well, it's also a mix of buys and sells. The day is not going to be very rewarding, I think, either ways. So Britannia is a buy. The stock had bad news. It's fallen now, but it's still finding support. So the support is at 4,700. With this as a stop loss, consider buying Britannia. Maruti is an intraday short. Remember, good quality stocks are, in fact, stocks are never carried forward on a short side. Intraday, you can consider selling Maruti. It's broken down a support level. Stop is above 94.70. Max Financial, again, had a very large down bar, and that continues, persists. Long upper shadows, that's very bearish. So Max is an intraday short, the stop above 785. And my final call is a buy call in Divi's Lab. It's in a trading range. It gives a very attractive possibility that it will break out on the upside. Consider buying that in anticipation with a stop under 36.50.
All right, let's do one thing. Let's take a quick break on that note. We'll come back with the pre-opening rates in just a bit. Also with us, we'll have PG Electroplast, the management, to discuss their Q1 earnings. There are some import restrictions announced on laptops and computers, so more on that coming up in a bit. So we're just getting ready to go into the pre-opening rates at the moment, and plenty of stocks in focus. By the way, a couple of these Asian markets have moved up now. So the GIFT Nifty is indicating a positive start. A lot of Asian markets like Taiwan, etc., are in the green. The Dow futures also in the green. So let's see how it starts today. But let's focus on JK Tyres. It was a strong set of earnings from the company. The revenue surged while the margins have expanded. We spoke to the company's president, Anuj Kathuria, who said that the overall outlook for the tyre industry and the company is positive, and they expect the subdued rural demand environment to improve going forward. Listen in.
So the overall outlook for the tyre industry and for JK Tyres especially is quite positive. This is based on the buoyant demand coming from both OEMs as well as the replacement market. As we see that the government spend on infra projects is on an all-time high, and we expect that this momentum will continue. The GDP growth rates being projected are also quite positive. In fact, for the year, we are now seeing we're talking about 6.5%. That augurs well with the overall demand for automobile industry as well as the tire industry. Monsoons have been pretty good. So there also, with the festive season around the corner, we expect that the further demand would be coming in. Even the rural demand, which has been subdued, should be looking up going forward. That gets us going on the 2-3-wheeler tires. Farm segment, yes, it is a little subdued, but again, I think so there should be some recovery coming in over there as well. So overall, the domestic demand, whether it is in the replacement market or even in the OEMs, should be looking good for the next 3 quarters. Quarter 1 was also a good quarter for us. We reported a consolidated net revenue of 3,729 crores, which is up by 2% on a year-on-year basis. So that is, that's a good indicator for the quarters to come. We saw yesterday that we had reported a operating profitability, the EBITDA of 465 crores And this was basically an expansion in margin of 450 basis points on a year-on-year basis. So this was basically a result of our efforts on improved operational efficiencies, better capacity utilizations, and also it was supported by the stable raw material prices. So going forward, we expect that the raw material prices would be range bound. The stability in that aspect should continue. And we hope that they will remain at that level or even kind of soften a little more going forward. The demand being healthy and robust, we should see further expansion in the margins as we go along, especially in the second half of the coming financial year.
All right, Prakash, what do you make of the tire stocks? You know, you have MRF, JK, both of the numbers are quite good. You have Apollo Tyres that's coming out with their set of numbers as well. How do you approach them?
I think it's a sector that's finally kind of seeing not just a one-off, turnaround in fortunes, but there is very clear demand and a combination of raw material benign this thing, trend. So that's where they are. And whoever has scale, of course, you probably have a one-off from a Balkrishna or something along the way. But whoever has got capacities and a good distribution network, I think the replacement market also is something which will start contributing significantly apart from OEM. I'd like to play this with the raw material or the input side, Nigel, rather than the finished goods on the tire side. And I keep on liking this Philip Carbon kind of a play where there's so much structural change that's happened within the industry in terms of supplies and kind of import substitution that a company like PCBL could probably benefit irrespective of which OEM, which manufacturer actually does better. So look at something like that to try this instead of a tire company.
Okay, another stock that, of course, I want you to listen into the conversation because it's been a phenomenal mover is PG Electroplast. 1 year back, the stock was at, I think, 800 rupees and today it's almost at 1600, so it's doubled. And in the last 5 years ago, the stock was barely at 150 and look at where it's at today, 1600. Very strong numbers as well. So let's get the management on our radar. It's a good quarter, very good quarter for the company actually. Revenue surged, margins expanded, and as we know, the government has announced some import restrictions on laptops and computers. So could this be a big opportunity for PG Electroplast? Vikas Gupta, the MD operations at the company, joins us now. Vikas, thanks for joining us. Before I ask you about your own numbers, which have been very strong, I want your thoughts on the government banning the imports of laptops. Currently, you guys don't manufacture laptops, but is this an opportunity for you? Would you look at expanding scope in this space?
Yeah, good morning, Sonia. So, basically, we are trying to evaluate the opportunity. Definitely, the move that has been made by the government to ban the import of laptops provides a huge opportunity for the local manufacturers. We are currently evaluating this opportunity and we might be going in for applying for the PLI in the IT hardware which has been announced. So we are currently evaluating. Definitely we will be making some moves on that.
Do you have the capability, sir?
So if you look at that, the capabilities are in the form of like manufacturing the PCB assemblies. So we are already doing PCB assemblies. We currently have infrastructure to do SMT lines where we can do the PCBs, and those lines are capable and fungible to do the laptop work also. So I think we should be able to handle that kind of work.
So you're actively evaluating and you may apply for the IT PLI too, right?
Yes.
Okay, by when will we know in that sense, or are you waiting for more details, etc.? And also just one more question. When this goes into effect, it was supposed to go into effect immediately, but do you think the government will, kind of be a little lenient with licenses, etc.? Because you don't want too much disruption in the market as well, right? Till local players are up and ready with their capacity and can meet that demand fully. So just a quick word on that.
So I firmly believe that the government should be little liberal on the licensing regime and try to see there should not be any disruption on the supply chain side, and ultimately customers should not lose on that. So definitely that is something it should be there. For us, we are already evaluating this opportunity as I told you earlier. So we'll come back to you as and when we are having latest updates.
Do you have any plans to put in fresh capex? You said that you have the capabilities at the moment, but any fresh capex, any money that you plan to invest into to sort of, get more capacities on board for this?
So, in fact, Sonia, that is also part of the discussion. We already have a JV where we are starting a contract manufacturing for televisions. So we might try to build more capabilities in that JV only and take care of this laptop opportunity.
All right. So for the 2 million, TV unit that you're just talking about, what kind of utilization levels will you be targeting for this year? That's why FY24 and then FY25.
So FY24, Nigel, the utilization will be very less because we will be up and running only by January or February. But going forward in FY25, we are looking at a volume of almost around 500,000 televisions in the first year of operations.
Okay. Can you tell us a little bit? I mean, this quarter's numbers were also very strong, almost a 26% revenue growth. Margins have expanded quite a bit. Your margins overall are still at about 9.5%. So you're just 50 basis points short of the double-digit mark. Is it a given that by the end of FY24, you will be at double-digit margins? And are you looking at high teens as well? Is there scope to improve margins further?
So, Sonia, I would like to stick to a guidance of almost around 7.5% to 8%. Definitely, the margins has improved for us, but we need to keep on evaluating the competitive landscape and how it is operating. Going forward, what we feel that the commodities might not be that benign. So we have to keep a watch on that. So we are not going to give any upgrade on that. But definitely, we are targeting to maintain at almost around 8.5%.
8.5. Okay, all right. Your capex for this year is what? Around 170, 180 crores?
Yeah, so we have already announced almost around 180 crores for capex.
What is the asset turn?
So asset turn, currently we have been able to achieve an asset turn of almost around 4.5. Last year in FY23, we ended with an asset turn of almost around 4.22. So we are improving on that also.
So this 180 crores will be able to generate what? Close to 700 crores at peak levels?
Yes, should be. That should be coming in FY25.
Okay. So this 30% growth rate that you're looking at for FY24, right? Is that something that you can sustain over the next couple of years?
Yeah, Sonia. So the kind of opportunity that is there in this in the market that we are serving, we definitely see an opportunity, and we can maintain a CAGR of almost around 30% for next 3-4 years.
Okay. All right. Thanks a lot for joining us and giving us your view. That's PG Electroplast. Very confident of maintaining, their guidance, their growth guidance, and that stock has been a stellar mover. By the way, let's take a quick look at the market because it's the pre-opening rates are kicking in. M&M is your big mover, up 1.5%, followed by HCL Tech, NTPC, Bajaj Finserv, and Paytm. That one is up almost about 8.5% after, the stake buy. It's a no cash transfer, so we'll talk more about that. But Vijay Shekhar Sharma will be raising his stake in Paytm to almost 20%. And the street definitely likes that. The stock is up almost 9% as we speak at 865. Let's get a quick call in from our technical guest now. Sudarshan is back with us. Sudarshan, what's the call at 9:10?
Well, Divi's Lab is a buy with a stop under 36.50.
And Mitesh?
I'll go with the buy on InfoEdge. Keep a stop below 47.85 and 5,100 is the near-term target.
Okay, all right. Thanks a lot, gentlemen. Well, let's talk about the stock, the big news that came in earlier today on Paytm. Abhishek joins us to help us analyze that piece of news. Abhishek?
Well, Nigel, Anfield will transfer about 6.5 crore of shares to Vijay Shekhar Sharma. So this is about 10.3% of equity in the company. Now, Vijay Shekhar Sharma, as per BSE release, holds about 9.1% stake in the company directly. With the said acquisition, if you take into account the calculation, his holding in the company can increase to about 19.4% post the transaction. Now, Vijay Shekhar Sharma will purchase this from Anfield via his 100% 100% owned overseas entity called Resilient Asset Management BV. So this will be an off-market transaction. Anfield now holds about 23.8% stake in the company, and post this transaction, their shareholding in the company will reduce to about 13.5%. Now, Resilient will issue optionally convertible debentures to Anfield, and the economic interest of that 10.5% stake will remain with Anfield. Back to you.
Okay, thanks a lot for that. Well, a couple of more stocks that you'd want to look at. BHEL, the losses have actually worsened year on year. A loss of 350 crores versus a loss of less than 200 crores last year. So the stock is under a lot of pressure. And then you have a couple of others like Bata, Britannia that are also reacting to weak numbers. So Mitesh, any of these stocks that I mentioned that you're looking at either on the short or the long side?
See, Britannia is something which I've had some sell calls a couple of days back. I think the stock is now clearly showing signs of topping out in the short term, and a corrective movement has started, which could possibly see stock head towards 4,600, 4,620 zones.
Okay, all right, Mitesh, thanks for that. IEX, let's put the spotlight back on it. Vivek is here with more. Vivek.
Well, good morning. A couple of important developments as far as, power exchanges in India is concerned, and IEX being the only listed player is expected to benefit. Along with that, the company also just released its monthly operational update as well. But let's have a look at the news flow first. What's actually happened is that the grid code as well as the GNA regulations have been notified by the regulator. What does it mean? General network access regulations have been notified, which basically indicates that so far, where in the power market, there was an arbitrage that was actually existing between the bilateral market or the long-term PPA market and the day-ahead market. So with the introduction of the GNA, this particular arbitrage is expected to reduce, and ICICI Security believes that this particular move can help volumes get back into the day-ahead market or the short-term market, a positive read-through as far as IEX is concerned. As far as the grid code is concerned, the grid code is expected to bring long-term PPA to exchanges if they don't get the schedule as per what they are anticipating. Once again, ICICI Security believes that IEX being the only listed exchange having a majority market share once again stands to benefit. As far as the monthly operational update is concerned, overall volumes up 19% on a year-on-year basis. However, the clearing price is still down quite significantly on the back of the fact that improved sell-side availability is there as far as the exchanges are concerned.
All right, thanks a lot for that, Vivek. Let's just head into the market opening now. This is the first opening of the week, and it looks like it's going to be a pretty good one. The Nifty is up almost about 60-odd points, making its presence felt. The bulls making their presence felt, rather. M&M, HCL Tech, NTPC, Bajaj Finserv are your top gainers at the moment, and some result reactions on the negative side. Balkrishna Industries is down about 2-odd% post a weak set of numbers. Bata is in the red after missing estimates, Britannia as well, and of course a couple of others. Paytm, as we know, will be definitely the stock of the day on the upside after Vijay Shekhar Sharma increased his stake, and now his stake stands at almost 20%. So much to talk about. Lots of PSU numbers coming out this week as well. There you go, the first tick on the index, so holding on to 19,550, climbing a little bit, up about 40-odd points. The opening, you'd have to say, is largely flat with a bit of a positive bias. Mid-caps are doing better, while the Bank Nifty is just about, okay, now it's in the red. There you have it. So what's dragging? Cipla is down about 2.5%. Britannia posted its numbers under pressure. Asian Paints, Nestle, FMCG is not looking good actually. ITC, Titan, Asian Paints, Nestle all in the red this morning. HUL is also under a bit of pressure right now. And now you have other pharma names, not just Cipla, but Sun Pharma that's also trending in the red as we speak. What's batting for the bulls is M&M, up about 1.5%, post their numbers. Very strong numbers coming through this time for M&M. Hindalco up about 0.7%, Divi's Lab up 0.7%. Wipro in the green, Ultratech Cement, TCS, etc. are all holding up in the green. Of course, a lot of the action is in the broader markets. Paytm is now up 10%, so we'll focus more on that. But otherwise, you'd have to say the market opening is decent. The Nifty is up about 50-odd points. The mid-cap index up almost 100 points, and the advance decline ratio well in favor of the advances. So looking pretty good.
Well, that's right. So, on Paytm, I just wonder whether or not it can hold on to this 10% gains because, there's no change of management. There's no economic interest, no change of economic interest as well. And there's no payment as well. So, for the time being, it's up close to 10%. I'll be interested to see whether or not it can hold on to these levels. Well, moving on to the next couple of stocks. Navin Fluorine, well, they have received a directive from the Gujarat Pollution Board to halt operations. So that's for 15 days. So that stock, in fact, is down close to around 2% as we speak. A couple of other notable movers today. Dixon Technologies, after the big run that we saw last week, well, that's pulled back close to around 4% in trade. ABFRL, though, that's down close to around 2% as well. On the flip side, well, APL Apollo Tubes, the numbers looked a little bit disappointing, but that's the kind of appetite you have for the stock. It opened up more or less flattish. The street seems to say that maybe they were sitting on some high-cost inventory. So going ahead, things will improve. So that one, in fact, is up close to around 2% as we speak. KPIT Technologies as well, up 3%. And Zen Technologies, let's pull up that stock. You know, it came up with a good set of numbers. It was more or less on expected lines because the management has been joining us here on CNBC-TV18 and telling us that they expect numbers to look good from here on. That's locked up close to around 10% or thereabouts. Prashant.
Well, you know, right out of the gates, so much action, right? Sterlite Tech, I mean, if you can pull that stock up, it's up about 7-8%. Numbers, by the way, for the first quarter, we had the management with us as well. Were not all that great. There was quarter-on-quarter compression. But the cabinet over the weekend approved the last mile Bharat Net connectivity, that is 1.4 lakh crores. So that is coming as a booster for this one. HFCL is the other one, which is up about 6% as well. So that's the action. Bector Foods is up 6%, is coming up with large volumes for this point in the day. There is Graphite India, which is up 3%, 4%. Ethos, well, look at that, 11%. 12% gains on Ethos. That's a big mover, 1,620 on Ethos. And coming up on the back of very strong volumes as well. Global Spirits is another one. And I think here also there is news flow with regards to, you know, we had the management with us, companies like BCL Industries, maybe we can put them up as well. BCL and Globus and a bunch of others. Maybe we are seeing a similar kind of action. Grain-based ethanol manufacturers. So BCL is the other one. It's up 5%. Yeah, Globus and BCL both up 5%. ICICI Lombard is up 3%. I think that approval for the bank to raise its stake came through. 3%. That's a mover with some volumes. KRBL is up about 5% or so. So there is no dearth of stock-specific news flow-led volumes which are coming through. On the downside, Adani Green is coming up with a cut. That's down 8.5%. Stocks at about, what, 927, 926, 927 or so. And, you know, I was talking about Dixon early on with Prakash. Dixon is starting down 4%. I mean, it's the government's given some breathing space. It's not the ban on import of laptops, tablets doesn't go into effect immediately. So stocks coming off just a bit. I think Nigel already pointed out Naveen Fluorine. We discussed JK Tires, which is down 1%. Balakrishna, I think we discussed. Mankind had a big run after the earnings, and Mankind is down about 2.5% as well. Sonia.
You know, the biggest nifty gainer now is M&M. It's up 2.5%. Nomura has quite an aggressive target price of the stock. I'll just pull up the stock for you. M&M is trading at sub 1,500. Nomura's target price is almost 2,000, 1,978 to be precise. So a lot of brokerages have raised their estimates, target price, etc. post the earnings that have come through. Very strong earnings, multi-quarter high in margin. So that's one stock. Just a couple of more stocks that I want to mention. Zomato, after reporting profitability, has once again climbed the charts this morning. Another 4% higher on Zomato, a fresh high on that, but I think it's approaching 100 rupees now. Affle India, good commentary from the management and positive moves there. And Morpen Labs, very strong numbers. So that is another stock that's looking pretty solid this
Just
morning.
one word on Adani Green. I think there was a large trade, right? Close to 2.5%, 3% equity, I think, has changed hands. So that explains why that one's down close to around 8%. And KRBL, well, we here at CNBC-TV18 have asked the management numerous times, if we're sitting on 1,000 crores of cash, what are you going to do? Well, they released a note on the BSE on Friday, post-market hours, that they're going to be looking at a buyback. So interesting to see what the quantum is. But it seems the street has taken that positively, stock up 4%.
Ethos came out with numbers?
Numbers, yes.
So that's a 1,650. So that's a very large move. It's one of the biggest gainers that we have right now in the broader market. 40 points on the Nifty now, so 19,560, consolidating a little bit, but consolidating higher after Friday's bounce back. Ravi Dharamshi is with us, Chief Investment Officer at Value Quest Investment Advisors. Ravi, good morning. Great to have you back on the program. Thanks very much for your time. Let's just start with this sort of new age digital themes, right? Zomato, it was a big quarter for them. I think they've turned profitable at least a year before they themselves said they would. Delivery, I mean, stocks had a run-up. Maybe that's why the view has changed a little bit, but I thought numbers were pretty okay. And then there is this news flow on Paytm this morning. What do you make of the space, Ravi, and any interest at all?
So disclosure, first of all, that I will not be able to speak any stock-specific thing, but overall this space, see, a lot of value is going to be created over here. The question is of entry point, and question is also that currently the funding winter is going on for the private equity market. So funding is not available if your business model is not in place, if you cannot sustain yourself. With Zomato or whether it is Paytm, it's not about this quarter's profitability, but can that model sustain itself? Can they fund their own expansion through their own cash flows? If that is the case, then I think these are strong business models, especially the food delivery one, because there are literally only two players. It's a duopoly kind of a market. So that is a good, so I would be positively inclined, but full disclosure, we don't own any of this.
Okay, positively inclined. By the way, our colleague Hormuz very helpfully tells us that at this price, Paytm has doubled. Remember, the all-time low was 438 rupees and Paytm is now at 887. So it's doubled from its all-time low. That's been the kind of trajectory the stock has seen. Ravi, hi, good morning and thanks for joining in. By the way, all of these platform companies, right, even Zomato is at, I think, a 20-month high as we speak. So all of them have come back in a big way. But having said that, how are you feeling about the market now, Ravi? What is the, the sense that you're getting? Is there a little bit of caution on board after what we've seen up until now? Or do you think this run can continue?
So I think we are in the early stages of the business cycle and market is tracking that. So, but surely nothing can move up, in one direction all the time. So we will find our reasons to have a shakeout, to have a correction. 5-7% kind of a correction cannot be ruled out. So maybe this is, the spike in the bond yields in US or RBI decision coming up. Those can provide the reason the market is looking for some consolidation correction. But having said that, I think the larger uptrend is solidly intact. There is not a single sign that, we are out of whack in terms of valuations or so there's too much euphoria on the street. If you see, the IPO market has pretty much not revived as of now. In fact, second half of this year, I think we'll have a lot more activity on the IPO front. So I feel confident that market's trajectory will sustain with a step back at best.
All right. Hi, Ravi. Good morning. Good to hear your thoughts as always. The chemical space was the big re-rating event that took place in the last 2 years or so. Now, we've got a few numbers that have come in, and clearly there are signs that things are slowing down. Offtake is reducing. That entire India, China plus one themes, some part of it seems to have played out. In the near term, do you think some of these stocks have already played out some of that good news? I ask you this, I think you'll have some exposure in specialty chemicals.
So we are completely out of specialty chemicals. Okay, we might own a little bit, but essentially, specialty chemicals has gone a re-rating not only in last 2 years. It's gone from 2014 to 17. The entire sector has gone 20x up. So the China plus one theme is well and truly recognized. It's not a surprise anymore. In fact, what the surprise is that the China has come back to the market in a big way and supplied the market. So again, in the larger trend of China plus one, chemical was the first one to move, and I believe it is the first one to be correcting as well, both from the point of view of valuation as well as the business. But having said that, despite some of the negative results that are coming out, it's not like the stocks are crashing. So that tells you that overall the market still believes in the story, and at some point of time, maybe it will be time to re-enter the sector.
But not now, Ravi. That's what you're saying, right? Even if you have a...
not.
Definitely not.
Yeah, I think there is a margin issue, there is a growth issue, and some amount of China plus one story is reversing because the China is coming back into the market. This will separate the men from the boys. Let's see who has the resilience to continue growing during tough conditions. So and also to maintain margins. So I think this is a good period to keep your eye out on which one are the ones doing relatively better, and those will be the ones to bet on, but not right now. At least not for few quarters, I feel.
Okay, got that. The other, I'm just kind of looking at bombed out places, is the QSR space, Ravi. Any interest there? And we heard the seasoned investor pitch Jubilant Foodworks as an idea. I mean, the grand old daddy, which has been out of favor for a while now. Any thoughts?
See, so first of all, I think market is very, very nuanced. Post-COVID, export-oriented sectors did very well. And then those kind of dissipated as the global economy slowed down. Then the domestic-facing sectors started doing well, especially the consumption-oriented, because there was revenge travel, people started ordering at home and dining out, both those things. So that led to the consumption-oriented stocks doing well. In fact, some of them are probably still doing well, like hotel and all. However, even that is now kind of normalizing. So every sector is going through its own cycle post-COVID and normalizing. I think QSR is 2-3 quarters already into the normalizing. And that the reason, because of the operating deleverage. And these sectors are very high on operating leverage or deleverage. If there is a slowdown in growth, they face operating deleverage. So the margins are impacted. So they are going through one such phase. And I believe this would be a good time to be accumulating. I don't expect the stocks or the sector to start doing well in a quarter's time. But these are all-weather companies and you should be accumulating them during bad times. So this is one such temporary issue that we are facing in the sector and we should be looking to add.
Okay, I wanted your thoughts also on what's happening in the auto space, particularly with names like M&M, right? Very strong numbers coming through, margins at multi-quarter highs. And the company has also assured investors that they will stick to their prudent capital allocation policy. What do you do at a time like this? Do you think there could be disproportionate gains on some of these names?
So without commenting on a particular company, but I would say is that, auto cycle has also been on a revival. Whether it is PVs, two-wheelers, CVs, or even tractors. Tractor, in fact, probably might be towards the end of its down cycle now with the revival expected in the rural cycle. So various segments of the auto are at a different stage. So CV cycle has been in upswing since almost 2 years now. Tractor cycle is probably going to begin its upcycle going forward. So I would say from a PV point of view, the trends are, you have to look at what the sub-segment trends are. The trend is towards SUVs. In e-two-wheelers, there is kind of in two-wheelers, the bump is that e-two-wheelers the subsidies have been reduced. Now there are lots of launches lined up and government will come up with some new regulation. So the space is still evolving and we need to see. And in terms of the CV cycle, I would say the major threat is from the longer term perspective that we want to move towards railway. If we want to bring our logistics costs down from 14% of GDP to 8-10%, then we have to move away from auto as our mainstay of logistics. So incrementally, there will always be a challenge on the CV front is what I feel.
All right, Ravi, final question before we let you go. There's a lot of interest in the renewable energy space, the solar power themes as well. I think in the unlisted space, Waaree Energy is something that, y'all have some exposure to. So tell us about this theme. How do you see it playing out from here and what's the potential?
See, leaving the ideological questions apart, whether, fossil fuel we should get rid of or what should it be replaced with or whether renewables have the capacity to replace fossil fuel. You have to think of it this way. We have been exploiting the Mother Earth's resources since almost 200 years now, since the dawn of industrialization. And we have accelerated the process of global warming as a humanity. And we need to slow that down. So we need to move towards circular economy and we need to move towards sources of energy which are abundant in nature, which is sunlight and wind. So no doubt about it that we will move towards renewables. Now within that, solar is the cheapest source of energy ever available to humankind. I mean, besides the fact that you could create fire by rubbing stones, this is the cheapest form of energy available. And now there is a strong momentum from the governments, from the corporate sector, from the individuals. Everybody is now working towards moving towards reducing their carbon footprint and moving towards renewable. So I think the critical point in the movement has been passed and now the momentum gathers pace. And there is no denying that this is going to be the sunrise sector, no pun intended, from the next 10-20 years point of view.
Okay, all right. Ravi, thanks a lot for stopping by and giving us your views on a whole host of sectors. Well, By the way, before we move on, just wanted to highlight on Paytm, the stock was up 10%. Now it's holding on to a gain of 6.5% odd. We'll require to understand more about this from the management if there is some more news flow. Because as of now, there's no change in management, there's no change of economic interest, and there's no money that's flowing out as well. So there needs to be something more for the stock to rally from here on. And I think that's why the stock has come off close to around 3.5% from the day stop.
But I'll tell you, this is not a bad deal for them, simply because it stops what was the fear, which is it stops that stake from coming to the market. It won't come to the market. At the same time, it'll give the option for Ant, because it's optionally convertible, to participate in any upside if the stock goes up.
Right.
And at some point, right, I mean, if the stock, languishes at some point, it's possible that it gets converted into equity. So we'll have to see. But the point is, I think this is it's not the deal that we thought it was when it first came out, but it's not a bad deal, even though it basically stops the fear for stockholders, which is that the stock will not come to the market at this point in time.
Okay, well, let's move on. We have many companies that are joining us now. Carborundum Universal is on our radar. Good numbers from the company in Q1. Their margins have expanded. EBITDA and profits have also seen a good growth. Sridharan Rangarajan, the managing director at the company, joins us now. Mr. Rangarajan, thanks a lot for being with us. The abrasives business consists of 70% organized market in India, and that's on a cusp of a prolonged growth, according to some reports. You are one of the major players in this space. Where are you seeing the demand largely coming in from, and what's the outlook as far as sales and margins are concerned?
See, I think abrasives is an industry where, wherever there's a infrastructure-led growth as well as the industry-led growth, definitely the growth of abrasive will be there. We see a huge opportunity, growing up in India. Already we see that the market has grown substantially high, and we feel that the trajectory of growth could at least be twice that of a GDP. That's a typical ballpark number that we put in terms of the growth of abrasive in relation to the economic activity. So when the economy tries to grow as large as, let's say, third in the world, obviously, it opens up a huge market opportunity. The kind of infrastructure-led growth that the government is planning, definitely the growth for abrasive is immense, and huge potential is there. I would say as far as the margin is concerned, I think we have this quarter we did about 15.3% EBIT margin. I think this should stay and probably stabilize and strengthen from here.
Well, morning, Mr. Rangarajan. The market dynamics are turning favorable for ceramics. You export 80% of your ceramic sales to global markets. Update us with demand momentum, growth, and export opportunities as well that you see going forward.
So we do, typically we work on solid oxide fuel cells export and metallized cylinder export. And the third area is, export of our refractory products for various, industries outside of India. And we are seeing a huge volume growth, and particularly in terms of the green energy momentum that we are seeing, hence the demand for solid oxide fuel cells, thereby the requirement of ceramic is growing up. And so we see that, I think this is continuous growth. And on top of that, I think we see that the ceramics requirement for semiconductor use, medical devices, all these are newer applications that will drive the growth of ceramics.
Right. So Electro Minerals is seeing strong demand for Indian players amid shifting supply chains arising due to China Plus One. Do you foresee a fair bit of growth in this space going forward?
So I think typically as you rightly put, they become input material for abrasives, ceramics, and refractories. And hence, the demand for them is first led by the demand for these products. Second is that people look for alternate source, and that's what is also driving the demand for electro minerals these days. And I think India definitely stands to gain here very much. And then being one of the large players in India and having a good capacity, we have increased the capacity to 100,000 tons of, alumina ceramics-based application. So definitely, we stand to gain in this growth momentum.
Okay, so can you tell us what is the outlook as far as both margins are concerned, and what kind of growth can you see in FY24?
See, FY24, we think that, we will be looking at least on a standalone basis, a 12% growth, and a consolidated basis about 10% growth is what we are looking at. PBIT margins will be better or closer to what we have done last year. And the return on capital employed would definitely be on similar lines or slightly better than last year. This is what we look at it at this point.
All right, Mr. Rangarajan, do you aim to increase your market share further in abrasives?
See, right now, as I said, that the growth of market itself is, is a huge opportunity for us. As I said that, the thin demand for thin wheel is growing leaps and bounds because of the, huge investment on the infrastructure and also the house building, the projects that the government has taken. Definitely a huge demand is it. That itself is a huge driver for our growth. And definitely if we just start using that itself, our growth rate will be far higher. And taking share is another opportunity, but we are focused more in terms of using this momentum.
All right, and what are the synergies from the recent acquisition of Rhodius Abrasives? How can it contribute to your business?
So, Rhodius is one of the, finest thin wheel abrasive manufacturer, and, they manufacture the world's thinnest abrasive wheels. So, which means faster cutting action and very quick, the workload reduction for the person who is operating. So, we look at least 6 synergies. The one is the raw material linkage, what CUMI can supply to the Rhodius ecosystem. The other one is that, we can supply complementary product portfolios to the Rhodius distribution network. But they are focused highly on thin wheel as one single product, whereas we will be able to supply products across the product range in abrasives. Third is that we can put through Rhodius brand in India in our distribution. And the fourth one is that we would be able to use the manufacturing base that we have in India, bring some low-cost products that we will be able to compete and supply and help Rhodius compete in the European market. So these are some of the opportunities that we are looking at as synergies that would forthcome from Rhodius.
Okay, thanks a lot for joining in. That's carborundum. By the way, the market is picking up pace now, so don't lose sight of that. About 30 points higher, 45 points higher actually for the Nifty. And the biggest Nifty gainer right now is M&M. So let's quickly talk about that. M&M, the stock is up about 3% today, and it's up 20% this year already. Large, brokerage moves, in fact, very aggressive target prices on the stock. So the stock is currently at 1,500, but just take a look at what brokerages are saying. Nomura is almost at 2,000 rupees in terms of a target price. CLSA has a target price of almost 1,900 on M&M. Goldman Sachs has a buy with a target price of 1,730. JP Morgan has a buy with a target price of 1,700. And Prabhudas Lilladher with 1,760. So we'll try and get that data up for you on your screen. The reasons for the rally are that the margins are at multi-quarter highs at 14.6%. The company has reiterated its commitment to capital allocation. They've said that their investment in RBL Bank is to explore synergies between the Mahindra Group and RBL Bank. And at this point in time, they don't look to sort of raise their stake anytime soon. There are some risk factors that I just want to put on board. One is valuations. After the steep rally that we've seen by M&M, the valuations are now higher than the historic multiples. So the stock is currently trading at about 20 times FY24 PE compared to historic multiples of around 16, 17 times. So that seems to be the only risk factor, and that's something that you need to take on board, when you decide about the stock. But of course, lots of questions on the RBL investment. The company has said in the past that the primary purpose is to understand banking, which will, of course, enable the management to enhance the value of its financial services business. But eventually, what the plan is, do they convert MMFSL into a bank? Will they eventually merge the two? Those are all the questions that we have on our mind, and something that perhaps, we would pose to the management as well.
Just a bit. We're just waiting for that the line to come up. I mean, all these cable companies, the smaller cable companies are all rallying. I mean, look at Birla Cable, for example, 20%. Its limit up. So that's a big move. 225. I can spot Universal Cables. That is up 13%. So this is one segment, and they're coming up with decent volumes, by the way. So it's not as if there is any lack of volumes. And the other one, PG Electroplast, we had the company with us on the bag of earnings, and that's up 8% as well. So out of the gates, lots of action. Sonia.
Okay, lots of action. And let's get back to the big, stocks. Solid performance from M&M in Q1. Revenue strong surge. Anish Shah is with us. Anish, thanks a lot for joining us on CNBC-TV18. I know you made a lot of clarifications on the RBL Bank investment in the press conference, and I was listening into that very keenly. But I just had one or two, follow-ups before we move on to the business. You did say that the primary purpose is to understand banking and, which will enable you folks to sort of enhance the value of your financial services business. But what is the eventual game plan? At any point in time, would you be looking to convert MMFSL into a bank, to eventually merge RBL Bank and M&M Finance? What's the eventual game plan that you're looking at?
Good morning, and pleasure to be here with you. RBL is essentially a profitable option play for us. It is a great investment in a very solid bank. And as I said, it's a very profitable option play. I'm actually surprised at the amount of media attention that it has received. And at this point, we've clarified in no uncertain terms that our capital allocation policy remains completely unchanged. This is a 400 crore investment in a sector that we know very well, that is a core sector for us, where we have a business that is valued at close to 40,000 crores. And therefore, it's really part of value creation for us, which is something that we have been driving. And that's something that you're seeing in the results that we've declared in this past quarter, but not just in this past quarter, over many quarters in a row now. We've had very strong results. So that's really where we are focused.
I understand that, Anish, but I think the reason there was so much media hype about this and investor hype as well is because ever since you have come on board and taken over, you've focused a lot on capital allocation, right? You've put in a very strict capital allocation policy in place. And this move came as a surprise because it's contrary to what you've put in place yourself. So just one more question on this. You did say in the press conference that at this point in time, you don't look to raise your stake any further. But in terms of a timeline, any targets that you have in mind? And I mean, in the next 1-2 years that perhaps the stake can go up to less than 10%?
Nothing at all. We don't expect anything to change for the next 2 to 3 years. As I said, it's a profitable option play. And just going back to your point, the capital allocation policy remains as firm as ever. In fact, we've strengthened it even more. And our focus, Sonia, is really to create value. And it's not just about where we allocate capital, but the execution on that as well. And that's something that we've demonstrated in a very strong way.
Anish, good morning. Prashant here. Sorry, just one more. Please bear with us. And we'll get to the numbers, etc. in just a bit. So you're saying two questions, actually. You said that this is an area that you well understand. What will just 3.5% allow you to do? I mean, you will be like any other shareholder in that sense, right? You will get the same information. You will get you'll have the same access to all the data, etc. So what do you hope to do with this? You said this is an option value kind of thing. That is one. And second, you will. And from here out, you're clarifying that you will only, which is the capital allocation policy, you will only invest in core businesses which can deliver a threshold return of 18%. You're clarifying that. So two-part question. Go on.
Yeah. So Prashant, good morning again. And I'd say the same thing, Prashant. It's a profitable option play for us. This is a small investment in a sector we know well. It's an investment of 400 crores. in the space of services for us, which has generated over 5,000 crores of cash flow in the recent past, which is what we shared on Friday as well. And therefore, I really wouldn't read much more into this at this point. M&M is on track to deliver its commitments. In fact, it has been delivering more than it's promised. We are on track with regard to growth in all our core businesses. Many are firing on all cylinders. Some are going through a process which is going to deliver much faster growth. And on balance, I would just say that we've got a group in automobile, in farm, and in services that has been performing at a very high level, and that is on the bedrock not just of a capital allocation policy, but on the execution that our teams have shown.
All right. Hi, good morning, Mr. Shah. Nigel on this side. I think we've gone on enough about RBL Bank. So let's talk about happier things. The EV investment that came in from Temasek. My colleague Sonia Shenoy had broken that story as well, and you all have confirmed it in your release. So tell us, what's the plan out here? Will Temasek look to increase stake out here? The money that you all have raised, how will you look to use it?
So here we've tried to keep the dilution limited, because this is a space where we've got a lot of confidence. We've been a leader in EV in the past. We paused a bit on that front because we've had to really come up with born electric products, which our team has developed now, and we will be launching starting next year. The validation of this was evident when BII came in as an investor, Temasek coming in again at a 15% higher valuation in a global context where electric vehicle valuations have gone down significantly is a very strong positive statement as well. And we feel that with both BII and Temasek, we've got two marquee investors who can help us grow the value, enhance the value of this business even further. And we just feel that we are in a strong position to regain leadership in electric vehicles with SUVs.
So, Anish, just one more question. This Mahindra electric automobile, right, where you plan to start rolling out products from 2025, what happens with that subsidiary? I mean, eventually, will it sort of will the earnings start showing up in M&M's consolidated numbers? Do you plan to spin it off into a separate listed entity? I mean, if you can just give us the eventual game plan, because there's so much investments coming in there right now.
Yeah, so the results will show up in M&M's consolidated numbers. And our game plan on that 5-7 years down the road could potentially be to spin it off. At this point, again, too early to say. All options will be open for us. But the benefit of having it in a separate electric entity is that all those options can come into play at the right time.
Okay, that's quite important. So potential game plan is to spin off the EV business in the next 5 to 7 years.
Sorry, I would just rephrase that. Spin-off is an option in the next 5 to 7 years. We've got to do a detailed evaluation whether that makes more sense or not. So it is a possibility, it's an option, but that is not the game plan right now.
Okay, you said it already, so we've taken what we can from that discussion. But you said also earlier that you plan to launch a new EV every 6 months from 2025. Now, what does this mean for your EV portfolio as a percentage of your overall portfolio? How much do you plan to take it up to? 30%, 40%? And what would this also mean for your blended margins? I mean, margins this time we're at multi-quarter highs, almost 15%. Once EVs become a larger portion, can you even take the margins to 20% over the next 2 to 3 years?
EV will be about 20 to 30% of our portfolio in 2027. We will have a range of born electric SUVs, about 5 of them, potentially 6 or 7, depending on a couple of new products we're looking at. And it will be a very attractive set of products. In terms of margins, our margins are going up again because of operating leverage in our auto business, the volumes that have been going up significantly. As you know, we've been putting in more capacity as well. Second is just strong execution. And some of that will continue and will have a positive impact on margins. For us, ideally, electric vehicles shouldn't change the trajectory of our margins. They shouldn't be more profitable. or potentially less profitable in the longer run. In the short run, as with every new launch we have, we see lower margins when a new vehicle is launched, because that's part of the cycle. It's part of building the brand. It's part of being able to reduce costs once we've got certain volume. And that's what will likely happen when every new vehicle is launched in the electric space. But as I said, we expect that to be 20 to 30%, so not a very significant number. And therefore, that may have a slight dampener on margins initially. And then that will come back, but that is something that we would expect, whether it's an ICE product or an EV product.
Anish, sorry, briefly, if I can just touch upon the XUV 400, the e-XUV 400. What's the monthly run rate that you expect here? I mean, if you can tell us that. Because I think when you had launched this back in Jan or Feb, the order bookings were pretty strong. Is the demand coming up, shaping up well, or is it taking a bit more time?
The demand is shaping up well. It's a product that's best in its class today. And it's one that has a very strong value proposition for the customer. So it is shaping up well, and it's a very good space for us to be in today before we launch our whole range of electric SUVs.
Okay, well, Prashant showing a lot of interest in that. Maybe you'll see Prashant, zooming into a CNBC office in a new XUV 400 EV. Prashant?
I'm going to keep an eye on you, Prashant.
Given the state of traffic and roads, I mean, it's just you got to fly in or something. Maybe.
Okay, all right. Well, ambitious there. But thanks a lot, Anish, for joining in, and thanks for being with us on CNBC-TV18.
Thank you.
Okay, well, that's the word coming in from M&M. They say that RBL Bank is a profitable play for them and their capital allocation policy remains absolutely unchanged. We'll slip into a quick break. On the other side, we'll be joined by Pramod Patwari, who's the Chief Financial Officer at Balrampur Chini Mills, to discuss their Q1 numbers. Good set of numbers coming in. Stay tuned for that.
Welcome back. You're tuned into Corporate Radar. You're on CNBC-TV18. Let's get straight to our next management. Balrampur Chini is the next one on our show. For Q1, the sugar business has improved. There's been good growth in distillery segment as well, but have declined a little bit. Mr. Pramod Patwari, the CFO of the company, joins us on the show. Hi, Mr. Patwari. Thanks so much for joining in. Well, the current sugar distillery mix is around 70%. Going ahead, how do you see this mix changing?
So, good morning, and we have given the earlier guidance also. This mix is expected to be the region of around 65-35. 35% will come from distillery division going forward.
And is that so?
Yeah.
By when?
By March 24.
Okay. For sugar exports, you allocated a little less than 2 lakh tons in this sugar season with reduced exports. What kind of export, book do you foresee, and what kind of growth are you looking at?
Sonia, the number what you are mentioning is with respect to the sugar season gone by 22-23. As far as sugar season 23-24 is concerned, government is yet to take any decision on the export. So it may take some time. And if we recall in the last year also, I think it was in the first week of December only when government came out with an export announcement. If we see the current realities, this October, we will be beginning the sugar season with around 6 million ton of inventory. Our in-house view is that production should be around 325 lakh tons against a consumption of around 280 lakh tons. So that will leave with us an available quantity for export of around 45 lakh tons. Now, maybe after the review of the monsoon season and the prospective impact on the yield, government will take a call at relevant point in time.
Okay. So can you tell us what is, in terms of sugar prices, do you see them going well above this 37 rupees a kilo? And, is there enough sugar stock in the country to meet the festive demand?
Yeah, there is enough sugar stock to meet the festive demand. As of 31st of July, 108 lakh tons of sugar is there. And if we go by the release quota for August and September, maybe another 47, 48 lakh tons. That will leave us with an inventory of around 6 billion ton. And next season will start maybe in the third week of October. So we already have 2.5 months of sugar stock on 1st of October, season starting in the last week of October. We don't really see any shortage of sugar coming in the festive season.
All right, so the average blended realizations, I think, for the past quarter was around 58. Now, with the kind of syrup as well as molasses blend, where do you see distillery realizations headed from here?
So 58 is a blended realization taking into consideration the ENA component also. Going forward, we are expecting an increase in the ethanol prices of juice-based as well as B-heavy on the back of FRP increase, which has happened. The FRP increase is around 3.5%, between 3 to 3.5%. So there will be a corresponding improvement in the realization of our products. So this can be in the region of around 60 rupees. Ultimately, it will depend upon what proportion of sugarcane we intend to sacrifice under B-heavy, juice and C-heavy.
Mr. Patwari, a couple of questions. Good morning, Prashant here.
Good morning.
We were picking up that the government apparently has increased the ethanol rates, prices for, ethanol made from grain, rice, etc. This was a big issue when we spoke with grain-based companies. And there were distilleries capacities which were being shut down because of the ban of use of rice for ethanol. What's the situation, and is there any impact whatsoever, related impact on a company like you?
So this grain-based or rice-based has two components. One is the FCI surplus rice, which we get from the FCI, and the other is the open market rice. After the sudden suspension of FCI rice, there was an increase in the prices of open market broken rice, which increased from 20 rupees to around 24, 25 rupees. 4 rupees 75 paisa per liter of ethanol raise, which the government has given, will address around 4 rupees per kg increase in the price of open market rice. So for a company like us, it was only a filler of our capacity. We always intended to operate this capacity in the off season. And as far as the next sugar season is concerned, we have already given a guidance that we are expecting around 10% increase in the cane price. That will leave us with more and more feedstock internally. So our dependence on FCI rice, or for that matter, broken rice, in the next sugar season is expected to come down only.
Got it. I'll kind of put on one other point, which we discussed last time also, which is for a commodity, for a product like sugar, in an election year, election-heavy year, this one and then next year, which is general elections, are you expecting any large increase in state advised price for cane? We saw the government fixing, I think, the FRP at about 315 rupees per quintal. Do you think that could be a precursor for SAP hike?
Very relevant question, Prashant. If we go into the past history, in 2019 election, before the general election, there was no increase in the UP SAP cane price. And this year also, the central government itself has raised the cane price by 10 rupees per quintal, which is around 3.25%. So there is no conversation which has begun at this point in time. It will be difficult for me to give you any number as such. But logically, what I can say, there is a history which says that there is a possibility that no price increase can happen. Central government itself has raised the price by 10 rupees per quintal only.
All right, we leave it at that, sir. Thanks a lot for joining in and speaking to CNBC-TV18. By the way, that's a new listing, Yatharth Hospital. Decent listing coming in there. This entire space, right, the hospital space has gotten a lot of traction lately. So do keep an eye out on that. Even the subscription was not too bad, actually, almost 40 times subscribed. This company has a total of 4 hospitals run in Delhi NCR and in Madhya Pradesh. And total capacity is about 1,400 beds. Even fundamentally, actually, it's done quite well. If you look at it in FY23, it's done a revenue growth of 30%. In FY22, the revenue growth was about 75% and compared to a lot of its peers, whether it's Apollo Hospitals, Fortis, Narayana, the valuations are also quite, attractive at just about 16 times FY23 EV to EBITDA. So it's got all the ingredients in place for a good listing, and there you have it, 12% higher. There are, of course, some risks as well. The hospitals in MP, the occupancies have not been that great in the first year, etc. So those are some risks on the horizon. But otherwise, this is a great space to be in, especially for retail investors. Most of the peer companies have done pretty well in the last many days. Let's move on and talk to Mitesh Thakkar about the markets. Mitesh, your views? I mean, the Nifty is holding on, actually. Give and take everything, it's holding on to 19,500. Any thoughts?
So I think, as I said, after the fall from Tuesday, Wednesday and Thursday, and we got a gap down on Wednesday, I think the move which happened on Friday and today looks like a pullback. My sense is that closer to 19,600, 650, you will see a lot of selling. So we are slowly accumulating put options, but we'll go aggressive if we get closer to about 19,650, directly short in the futures market. The corresponding level on Bank Nifty is closer to about 45,400 levels. But yeah, I think the idea is that again, we are accumulating put options. So we're slightly negative on the markets. In fact, on the trading side also, right now I have two sell calls. The first one is Nestle, which is clearly seeing some kind of a breakdown. So recommend selling here with a stop just above levels of 22,460 odd levels. That's your stop loss. And on the target side, I'm looking at a test of around 21,850 to about 21,800. And the other stock is Chola Finance, which I would recommend selling with a stop at about 1,092, a target of around 1,030 on the downside.
It'll just put up ABFRL. That is coming off sharply, 6.5% cut on ABFRL. Mitesh, any thoughts?
Yes, Prashant. I think the selling started on Friday, and today we are seeing follow through. The stock last time when it was hitting lows made a weekly closing bottom of around 190. So I've been penciling a target of 190. So we are now close to that. But if we start breaking below that, good chance that the stock will decline further and head towards levels of around 170, 172. So I think there's about 10% more downside over here. Avoid the stock. Don't try to buy it on declines.
Got it. Thanks very much, Mitesh. Appreciate you joining in and take that point on the Nifty. I mean, 19,650 or so, a lot of selling. That's around where the 20-day moving average, around there is a 20-day moving average as well, as we pointed out in the morning. We'll take a quick commercial break here. We'll come back and we shift our focus to the commodity markets. Manisha is here with that.
Shifting focus now to the commodity markets. Manisha Gupta is joining in to give us the one commodity that she's tracking today. Manisha, I think the ongoing theme has been the surge in crude prices. But you take it away. What are you looking at today?
Well, I'm looking at the crude oil prices because, over the weekend, you also saw the FAO food numbers for the month of July. And after many, many months, you've seen inflation come in for food. And that's exactly what we are looking at in sense of energy markets as well. So $86 a barrel is on screens now. And we have seen 6 straight weeks of gains come in for the crude oil prices. It is trading at a 4-month highs as well. And after nearly 15 to 16% of gains for the month of July, in the month of August as well, the first week itself has seen 1.5% of gains coming in. So strong going as far as the crude oil prices are gone. And you really have to give the credit to the producers here because Saudi Arabia and Russia have continued to cut output. Saudi Arabia says that 1 million barrels per day of an output cut is what they're looking for September. And Russia is going to cut 30,000 barrels per day as well. And this, they say, can deepen going forward in the months of September and October and can be extended as well. So even as they are cutting outputs, the kind of rhetoric that is coming in from them also has been quite bullish. Saudi Aramco, in the meanwhile, also has raised the official selling price for Asia for a 3rd straight month for the month of September. So that tells you that even as the fuel prices are on the higher side, the demand has been improving as well. So it is the market share and higher prices and cut in output, the kind of strategy that you have seen OPEC and allies go on with. There is also decline in production and inventories in US, where the US inventories last week saw a decline of 17 million barrels, which is on record the highest really. And the markets also are looking at the US production itself, which has continued to decline for a 2nd straight month in the previous one. US operating rigs have continued to decline as well. At 525, it is the lowest since March 2022. Tells you that the production has been on the weaker side. The US Consumer Price Index is what the markets will be watching out for. So this really is the report card on what you can expect in this week. Now you have China trade data coming in tomorrow, China inflation on Thursday, and the US inflation numbers on Thursday, and the producer inflation numbers on Friday. So every single day you will see movement come in for the currency markets, and commodities will take cues from that.
All right, Manisha, thanks very much for that. That's commodities in focus. We'll take a quick commercial break here. Our special segment, it's the economy. Lata will get chatting with Suresh Ganapati, banking analyst at Macquarie Capital Securities. They put the focus on the financial sector, review the first quarter performance there. Stay with us.